Hello, everyone. Good day from Latvia. Today, we're in our lovely partner's office, Orenen, and you can see probably some of the interesting books around the laws and taxes. And ideally, this fits well with Mika coming in and world of blockchain. And today, we're also switching the tempo around that we're creating these podcasts in English so more of you can understand in simple ways what is blockchain, what blockchain could offer, either for your businesses, either for you as a personal individual. And today we're very happy to have our next guest who's been doing quite interesting things in his previous experience with Lithuanian Central Bank. And of course, currently now working on tokenized assets in financial world. But I'll let him introduce himself.
Hello, everyone. Marius, ex-regulator, as you clearly pointed out, worked at multiple central banks. Probably spent more than 15 years at various central banks. But I would say that in my previous life, I used to be an economist and always was interested in things that are moving us forward, edgy stuff like crypto, digital assets, moving payments across borders. So currently I'm leading Axiology. Axiology is a new type of capital market infrastructure which is facilitating allocation of capital across Europe on blockchain. And as of today is one of the 4 regulated entities that are allowing it to be done. But I guess we'll be talking more about that later on.
Yes, we'll get to that. But I think it's very interesting. You mentioned you were an economist in previous life and you worked in a lot of central banks. And then if we speak about like blockchain, then it all kind of started from Bitcoin with like completely different kind of ideas. So how did you get there from being in the real financial world and then kind of trying to switch to these new kind of solutions that blockchain offers?
Probably like the main line of thinking was I got by coincidence into the area of financial market infrastructure. What does that mean? Like these protocols, linkages that make sure that when a person from Mogadishu sends a payment to UK, it actually goes through. So I got involved in this. And then at some point, the idea of an alternative came in, which is Bitcoin, right? The main idea of Bitcoin was that it will displace money and it will be the main of alternative payment method. But like with many ideas, one thing turns into another. And now probably we're talking about a completely different idea of what Bitcoin introduced.
And what's your feeling around this? So like the first Bitcoin idea and if you compare it to today, how do you feel around it? Are you supportive of the changes that's happening, or you're still like, let's say, hoping for the past to come true that yes, we're going to replace everything and Bitcoin's going to be the only thing or?
Mm-hmm. I never was, or I don't believe I ever will be a, Bitcoin maximalist, or the person who thinks that, the only crypto asset that there is Bitcoin, all the rest is, just playing around. To some extent, I believe that Bitcoin is also playing into the emotional psyche of the people. People, not me, but also me, sometimes use like edgy stuff, People go jumping off the cliffs. They invest in something which is ridiculous return and ridiculous risk. Or sometimes we call it not even investment, we call it gambling, right? And financial regulators, sometimes they want to prevent people from taking that risk. And others, they want to go into this direction. So to me, Bitcoin turned into kind of this idea which grew into something more, and that more realized in the idea of digital currency, central bank digital currency, new regulatory innovations on maybe not everything needs to be recorded in a centralized database, but when we can, utilize this idea of shared ledger, shared knowledge across multiple market participants, and we can have better visibility of what's happening on the network. Because in itself, it produces better outcomes. What better outcomes? If you have one entity, what is one entity? Imagine that in this world, we would have one bank, one insurance company. Everything would be more efficient, right? Because, the bank would have, huge visibility of who got what. Insurance company can price risks, and theoretically, everything should be very efficient. But we are not naive. We understand that one entity, we definitely will squeeze everyone out. So there's always the interplay between efficiency and complete distribution. And crypto assets, I really believe, put this thinking at the center.
And probably we'll get to the, let's say, juicy stuff a bit later, but I need to ask this one last question around Bitcoin. So do you think that, because we know there are some countries who's actually using it as like peer-to-peer, and what is your view? Do you think that's going to continue or like grow to different kind of countries? Like if we look from a money perspective, or that's, let's say, yes, we know their currencies are not stable and they're using this kind of solution, but like, do you see that could be a thing for, let's say, European countries or countries in different kind of places?
I mean, with time I learned to be less categorical, but I guess I can be categorical and say no, Bitcoin will not become even more proliferated payment method. Why? Because like gold, gold can also be a payment method, but gold became this storage type of facility, and Bitcoin in itself, to a certain part of our global society, is playing that role. And if you want to engage in kind of financial transactions where I'm giving you something, you're giving me in return a service or a good, there are much more efficient ways to implement that. Can Bitcoin be more efficient? Yes, but then it will be jeopardizing something that is also really valid. It is complete, my keys, my wallet type of structure.
Yeah, and we see quite a lot of problems with those two things.
But if I have gold in my pocket, it's the same problem, no?
Yeah, well, yes. And it's a lot harder to transfer it to someone else, right? Like if you still want to get rid of it in some kind of way. But you mentioned that through this, you found different kind of solutions that you could be using to improve the current economical systems that we have. So can you explain for someone who's not in finance on what axiology is actually doing? Impossible.
No, of course, probably it should be possible. That person must understand at least, what investment means. Investment means holding some kind of an asset, but not gold, right? But some financial asset. And financial assets come in different forms. Equity, you own a share equity of a company. Some companies don't issue shares, they issue debt instruments, like bonds or some other more complicated instruments. And those instruments need to be issued. It needs to be a record, how many of them are issued, who holds them. And there are, as of today, entities which are record keepers, like in real estate. We have a real estate register. And there is a securities register. And that's called Central Securities Depository. It's like the golden truth of who owns what. But if I investment means buying and selling. Where do I do that? Do I go on the street and buy securities from a person on the street? No. In a financial world, transactions in financial assets are regulated, and the marketplace is an exchange. For example, Nasdaq exchange, Deutsche Börse, or New York Stock Exchange. So this is the place where transactions happen. The transaction is involving a change in the record of who owns what securities on a central securities depository, and a change of cash, because I'm buying and selling something. But the problem with the current capital market infrastructure is that securities are recorded in one infrastructure, cash is in the banking system. Let me remind you, the marketplace is yet another infrastructure, the exchange. And by the way, neither you or me, we cannot go directly to Nasdaq and start trading. We need an intermediary, broker-dealer, to allow us into that financial market, because that entity needs to implement regulatory requirements. Like, is this financial security good or bad for you? Are you sophisticated an investor or not? And they are like the gatekeepers. Now, what Axiology does, under this new regulatory innovation that European Union introduced in 2022, we combine all of those infrastructures into one regulated infrastructure on blockchain.
And, well,
simple answer.
Very, very simple answer. And so it's on blockchain. And now the people who knows about blockchains and so on, they probably, the first question would be, what blockchain? Like, what are you guys working on?
Right. Here we're entering a philosophical discussion of public versus private chains. In the most simplistic way, there is a piece of paper. It's like a central database where I can record it. You own what, who sold what, and I write on that piece of paper. If I control that piece of paper, it's me, I'm the infrastructure. What blockchain allows, it allows that piece of paper at the same time to be the golden record at multiple nodes on the network. The distribution nature of blockchain, of a distributed infrastructure. And what blockchain does, it allows the entries or additions to that ledger to be implemented only if the conditions are met, right? That transaction is feasible. For example, that transaction is feasible, you are selling something to me and I'm buying, you cannot sell if you don't have, right? Right now, you cannot sell. If I look at that piece of paper, there's no record that you have anything, you cannot sell, right? So that's what blockchain does and how Axiology implements this shared infrastructure. But maybe to simplify it even further, what Axiology does, we implement the dream of European Capital Market Union to make it easier for companies in one corner of Europe to reach investors in the other corner of Europe. Because right now, as I explained before, these entities sometimes are not connected. The company is living locally, they are being served by local banks, they go to the local broker-dealers. That local broker-dealer doesn't have connectivity to someone who wants to invest at the same time in Portugal, and vice versa.
And the idea, so it ties around of synchronizing all of these European capitals, correct?
We are striving to achieve maybe something which is not possible, but ultimately, but we're going into that direction. We want to have a fully connected infrastructure that, regardless of the assets, regardless of where you are living, what type of intermediary you are using, if I want to invest in a bond issued by Latvian government, I don't have to open an account with Citadele Banca, because sometimes that's the only option.
Maybe it's very interesting, because I just came to a thought that, okay, so you're trying to synchronize everything in one place, but does that, because I don't quite get it yet, because doesn't that bring out all of these other players out, or it's a platform that kind of connects all of them in one place?
Mm-hmm. That's a very good observation. We can use crypto language here. DeFi, is it really replacing everyone? No, it depends how you look at it, It's a protocol, lending protocol. You can come and build your business of lending on that lending protocol. A protocol is like a collection of rules. In the current environment, the protocol that we're having is saying if you want to be in the business of taking someone else's money and giving to someone else, you need a banking license. If you want to facilitate co-investments, you need a crowdfunding license. So this is a protocol. Is it displacing others? Yes, if you don't have a license. If you want to come into the business, you need to comply. So building these distributed structures where everything is connected still requires you to be part of that implementation. You need to play along the rules of that implementation. So in case of Axiology, if you are a company, you want to raise money by issuing tokenized bonds, well, you need to register on Axiology. If your investors want to invest in those assets, digital assets, well, they have to be onboarded because it's financial security, right? And they have to be onboarded by a regulated entity. Otherwise, they cannot access those assets.
So there's a lot of regulations, and probably the one that's currently, well, we know Mika is there, been there for a few years now. There's companies who's got the license. I believe you guys are also not yet somewhere in the roads, or you guys don't need one?
The world right now is being split in two parts. The world of digital assets. On one side, you have crypto assets, but not financial securities. On the other side, you have digital assets that are regulated financial securities, but in tokenized form. That is the side that Axiology is facilitating. Does it mean that we never venture into the other side? Actually, we do. We use stablecoin for the settlement of those tokenized securities. Meaning, we don't have a MiCA license, we have a DLT license according to the EU regulation.
Okay, yeah, got it. And but now EU regulation is kind of like trying to bring some storm in the water with the ESMA. What is your views on that? Like that you're not going to have your own central banks could be taken over, looking into companies and helping
maybe
them.
It's worth, for the sake of the listeners, to kind of explain it in a bit more coherent way what's happening here. What is happening is that Europe sees that our capital market is not working. For the last 20 years, we have been trying to build this capital markets union. The idea being that even though we have national states, we should be interconnected. Latvia, Belgium, Lithuania, we have our national competent authorities, regulators. We have laws, corporate law, many books here about that. But we still can facilitate transactions across Europe because Europe is an economic zone. Reality is, are you investing?
Yes, yeah.
What do you use? What's your main app or?
The Trading 212. No,
Trading
no.
212. Great. Trading 212. Of course, you only invest in Latvian companies. Not really, right? Because majority of normal, even sophisticated, unsophisticated investors, they go on any broker-dealer app, and the thing that they invest in, S&P 500, the magnificent companies of Apple, Google, and others that they know. Why? Because that's where the liquidity is, that's where the action is, and we don't see those things happening here. So the idea of European Union was we need to do something because the savings of European citizens are flowing into the United States. We need to do something about it. We need to unify regulatory environment across European Union? Well, unification might be good for some countries and might be bad for some other ones. And this is the trade-off that everyone now is discussing. So European Commission put forward a so-called market integration package where it is proposing to have significant market participants to be regulated directly from single supervisor, not by Bank of Latvia, Bank of Lithuania, or Bank of Spain, right? So that there is single treatment. Is this an absurd idea? No, because you know what? In United States, there is one Securities Exchange Commission. By the way, there is one Central Securities Depository, DTCC, and in Europe we have 27 entities. And that complication is the reason why capital market is so complicated and cumbersome for companies.
Well, it's interesting, but don't you also think that? Well, of course, like capital markets are tough, but don't you also think that it's the environment that we are in, not only from regulatory perspective and how you can attract capital, but don't you also think that we don't have actually so many opportunities from just companies' perspectives? Like, because yes, you could, because what we hear in Latvia and what I've heard is like, yes, you have your companies around here. Yes, you can make some money, but if you really want to grow, you still need to go to US. Like,
but why? Because the consumers are there, or because you can do business in a much more efficient way? One of the arguments, I mean, I'm a company as well, right? Axiology is a company, and we are early stage company, and we need growth capital. Everyone knows for startup, it's much easier to be doing that stage of type of existence in the United States because the risk capital is there. But there are other reasons, why people do stuff. I want to be doing something here because I believe that the opportunity here to fix things is much more opportunistic for me. Whereas capital market is now working quite okay on the other side of the Atlantic. So that's what I think.
And you think that this unification is actually going to fix these kind of issues, that there's going to be more risk capital around in Europe?
We discussed it with some colleagues. The direction is not linear, right? And it's not like, something is wrong. The only thing that we need to do is like to flip the switch and things will change. It takes time, right? And the direction of European Union now with geopolitical pressures and everything is we will not survive unless we become more efficient. We get rid of bureaucracy, multiple layers, 2 parliaments, simplify regulation, and allow companies to do business like our competitors, like those guys in the United States who, got crazy and now can do anything. So we also need to move faster. But, we have multiple players. We are not single United States. We are multiple European Union member states who have politicians, who have companies, vested interests. So it is a complex political game that needs to be implemented. But the ultimate objective is to create conditions, I'll be speaking the words of European Commission, to create conditions for market consolidation. Because there are multiple players. One thing is to say we abolish everyone and we create, one very efficient, big, mega infrastructure. Or the other idea is to create conditions so that companies start consolidating cross-border. A French company buys a German one, German buys a Polish one, and all of a sudden you have a cross-European company.
And do you think that's like currently for Europe, do you think that's currently the number one priority in finance that they should be looking at, and like finance and regulation, or is there something else? If you would need to choose, let's say, your top one of these kind of tough questions and decisions that people need to make, Would this be the one, or something else related with it?
Access to capital is the essence of corporate finance. A company can finance its activity from retained earnings, profit, external finance. That can come in the form of I take a loan from someone. That's working pretty fine in Europe. That's bank credit, which is also very complicated and some say over-regulated, and that's something that is also being addressed by simplification initiatives in Europe. Or I can go on a capital market. And linking to crypto. The idea of crypto is brilliant, I have an idea. I'll just list my token, and the second it is listed on public chain, it is immediately available from Somalia to Riga. Whoever wants to invest in it, right? Because in the current so-called normal world, if I have an idea, I need to approach a bank. The bank asks for documents. They may or may not give me a loan. If I want to issue a financial security, I don't start you how many things I have to do and how many lawyers I need to pay to issue a corporate bond.
It's hilarious from that kind of perspective if we look at it, because and we see and I think it also was one of the drivers for blockchain and tokens and why we're here, because there was this kind of capability that, yes, as you mentioned, Somalian person or a person in Antarctica, if anyone lives there and are investing, they could do that. And that's what's actually showing that if you send...
So one could ask, what's wrong with it, right?
Yeah.
Why we don't allow just people to do whatever they want?
Well, we know what's wrong with it in some of the cases.
Oh, what is wrong?
Well, for example, we see that 90% of these tokens that are launched, that you just lost money because you get scammed.
But do you think that people don't know that? Look, I will not officially put that company, but it's one of the biggest broker dealers in Europe. Very big name. And if you go on their website, you go on their website and you say, I'm from European Union and I'd like to open an account. They say 89% of retail investors trading on our platform lose money. Please open a bank account. Please open a brokerage account. That's not deterring people, The fact that I will be losing money doesn't mean that people are stupid. That doesn't mean that people are not financially uneducated. This means that, look, I want to gamble. Don't block me. I want a casino. Everyone knows casino always wins. But people still play casino games, no?
It's the emotions.
It's the emotion. I'll put one company on the spot here. Do you know a company called Pump.fun?
Yeah.
Yes. For those who don't know, Pump.fun, it's an opportunity for anyone to issue their own token. You can be the next Melania Trump token issuer. The only thing that you need to do is to, have some kind of a white paper. We'll do some listing. I cannot say listing because it sounds like securities. We'll just register it somewhere on our platform. And we'll do some shilling, some market manipulation just for fun. I cannot say market manipulation because it's just for fun, right? And who can blame if people do it for fun? And that platform right now is making 4 million euros daily in trading fees. And that just shows you how big the market for that type of activity is. Does that mean that those people don't know that, this is market manipulation that they're doing? Of course they know. Everyone knows. And people like doing it. So, back to my question. Why we don't allow people to do what they want?
And, well, what is your answer to this then?
If you know that the game that you will be playing is rigged, or it can be rigged, or that the referee can change the rules depending who pays them more. Will you play that game?
It's a very good question.
Only if you think that you can also
Rig or, you have a higher chance of winning. Yeah.
Yes. But if you don't hold that view, you don't play that game. And that is the failure of unregulated markets. Unregulated markets fail because, I don't want to be playing this emotional game. I'm not in the business of gambling. I really want to invest in companies which are good. But how do I know which one is good or which one is just gambling or, scamming me? An average company probably is a scammer. I'm not investing in that market. And that's why we have illiquid market, no activity, no companies being able to raise money. Because, there's a crook willing to raise money and a good company. They all look the same to me. I'm not investing. That's why smart people created regulation. They say, look, we need to prevent those crooks of entering the market. And in this regulated space, there are only good companies. How do we know? They're regulated and they misbehave, they go to jail. Therefore, it's regulated. And then people start investing. So rules is not only preventing, rules are enabling people to invest.
And protecting the consumers. And if we look at...
If you want,
B2C.
right? Whatever you want. If you want to be gambling, there's a place for that. If you want to be investing, there's a place for that.
And so you mentioned that Axiology is doing tokenized bonds. So, I hope that in 2026, majority of the people knows what is bonds. But I think the big question here would be tokenization. Can you maybe explain why do we need to add something on top of the bonds and how does that make sense?
Right. There's a problem with this verb, tokenization. It means that there's something and we transform it into tokenized form. There is value in that, but it's much more complicated to explain because when you transform a thing from account-based entry into tokenized form, you can move it into wallet structure and it becomes much more easier to move around. Efficiency of transactions increases. But what Axiology does and is able to do, instead of issuing a security in a normal way, where then you need to tokenize it to achieve the efficiencies that I was explaining in the first argument, you can issue securities in digital native tokenized form. So instead of issuing a share, instead of issuing a bond and recording it through the current infrastructure, you come to us, we give you a regulated ISIN, and you issue a token. And that token lives in tokenized world. You can use stable coins for settlement. Very soon you'll be able to use digital euro for those security settlement. And that security lives in token form.
And it lives where? In your own chain, like private chain that you guys are holding up? And
yes. It lives in a private chain. It is a private chain not because we are we believe that the only way to do that is a private chain. The world is dynamic. 2 years ago when we started, regulators did not even allow anyone from financial market close to the public chains. Right? Stay away. Only crypto bullshit is on public chains. But with the maturity of blockchain infrastructure, various tools and regulatory implementations, regulators are increasingly opening up to public ledgers. And what is a private ledger versus a public ledger? We can transform, whatever the customer wants.
And essentially you're going to be giving out these tokenized shares or bonds and so on. But who's looking after your ledger? Because if you're giving them out, then someone else is also looking at these kind of data sets and so on, right?
Now we're switching into a bit more technical discussion here. So Axiology is an operator of regulated infrastructure which is distributed. So we run a node. You are a regulated entity. You want to be operating on our infrastructure, we can give you the node. If you are sophisticated, you can run your own. If you're not sophisticated, we help you run it, and we are operator of your node. But it's your node.
Okay. Well, yeah, for those who understands blockchain, that's very simple. For those who doesn't, essentially you get your own kind of little box that you can run through the stuff. And if you can't, then Axology can do that for you also.
We give you a plug, you can plug it in.
Yep.
And when you plug in, you can operate.
Interesting. And because we have as much as time as we have, but there's still some things that I wanted to discuss, and you mentioned digital euro. But I think, so we discussed the Bitcoin as it kind of came out and what was the views, and now that there's stable coins and you have these kind of new opportunities for companies and for individuals. And then we have this kind of, as I would say it, like this silent kid in the room in a corner that everyone is kind of looking at and then like turning away and can't quite understand what will CBDCs do with the world, because like there's in public socials and so on, there's a lot of discussions around, okay, if CBDC is even good for us, will they take our privacy and we won't be able to pay in our shops with these euros, or I can't travel 1,000 kilometers and pay there. What is like your views, and especially because you did work in central banks, like
I was part of a high-level task force on digital euro. And by the way, Bank of Lithuania issued the first digital numismatic coin, but that's besides the discussion. It's very simple. You have cash. How do you know you have it? It's either in your pocket or it's not, right? But that's physical. With the world moving into the digital provision of services, data and everything, we need transactions where I need to pay someone in electronic form. I have no problem. Apple Pay, transfers, SEPA, checks, whatever, right? But those transactions that I just mentioned, they require an intermediary. A bank which is holding my money to send money to someone else. Or a check company, to operate the checking system. I want central bank issued currency, but not in physical form in my pocket, but in digital form in my wallet. And I want that money to be issued not by some woo-woo company, whatever that means, but by central bank, which I trust. And that is what European Central Bank is working on in the form of digital euro in a project. Is there a problem to be solved? Remains to be seen. Why? Do you have a problem with your bank? You don't trust them? Are they not providing good service to you? Do you need cash? It depends, right? There are circumstances sometimes in the world, like in Venezuela right now, or maybe in United States very soon, where I may not trust institutions. I want full privacy, I don't want anyone to know where I'm spending my money. Then the only way to do that is in physical form. But the world is digital now. I want the same ability in digital form, and that is central bank digital currency. But this is only one church. There's a second church. The biggest central bank digital currency project in the world was called Project Hamilton. And that was run by Boston Fed in United States, together with MIT University. And it was the most advanced infrastructure that now is dead. Why is dead? Because Trump came to power and said, F CBDC, long live stablecoins. And what is a stablecoin? It's the same thing, but it is issued by financial intermediary, and we know it is secure, so it is backed by some backing asset. The same currency, for example. That's what stablecoin is, right? And United States is going into the stablecoin route. Europe is doing central bank digital currency. United States is doing stablecoins. And there's a third church, tokenized deposits, where I have my money in the bank. I'm kind of okay with it, but I don't want to be dependent on the bank. Can the bank give me a token which is backed by deposits in my bank? Tokenization of deposits, not tokenization of books, tokenization of financial assets. Can I tokenize money? Yes, you can. And that's tokenized deposits. In the Middle East, they're very big on this topic, and UK is also, Bank of England is working on that.
But and this, probably for those who's very afraid on how things can turn, because if we look from blockchain perspective, you have this kind of technical options to, let's say, not allow spending minimum, some limits and so on, because what I want to get out from you is to break this kind of myth that is going to be the one that is going to control us, or that's going to give us more capability.
In this world, everything is possible, right? I can create a product which looks like it's providing full privacy, but I have programmed the privacy backdoor.
Yep.
Yes. And how do you know? You never know. In one conference, and that's not addressing a problem, maybe it's even increasing suspicion. One very important ECB official was asked, so will there be privacy? And they say, yes, of course. We have all the data. We know all of your transactions, but we will prevent ourselves from looking into those. Right? It doesn't sound very serious level of privacy. But, that's how things are, If there are entries in the database, there are entries in the database. And if I'm paying you and I'm using someone else as an intermediary, that intermediary has access to my data. Unless we implement some super complicated cryptographic implementations, which look like Bitcoin, or some crypto asset, which provide a very complicated but bulletproof level of privacy. But full privacy then is dangerous. With full privacy, I can start engaging in illicit transactions. So we need to have a backdoor for some important institutions like Secret Service or money laundering overseeing entities like FIUs. So it's a very complicated balance.
Yeah, it's life. You always need to give something to get something, right? And here's the scale. What can we afford from privacy question to give to gain, or vice versa?
I believe that maybe we can have different forms of money. Super safe, super private, and whatever. One is very easy to use, one is more complicated to use, and one is only for the geeks who really, really care about that. Why everyone needs to use the same? Because right now, we have one standard. Of course, critics will say, Marius, you will be destroying ubiquity of money. Meaning, same euro is the same euro. Well, but, we already have different forms of euros. There's paper euro, there's money that we keep in the bank account. And now we already know that, there is electronic money, and soon we'll have digital currency.
And speaking about money, so what is one question that people don't ask about money, but they really should be asking about money?
Where is it coming from? I think it's a mythical, it's like God, money. Like
the money tree.
Yeah, where is it coming from, right? Money is our creation. We created money. We created an agreement under which we exchange value. And that agreement leads to rules, intermediaries, a process how physical and digital money is being created. And, economic students know, what is monetary policy, why we have inflation as a objective, not inflation going beyond some threshold. And all of that is a process how money appears. But people want simplistic answers. They want to know who is the guy who is giving money. But it's not that simple.
The handout man. Well, it was a pleasure speaking with you, Marius. And I think not only for me, but also for listeners, it was very interesting because we're currently at the stage where actually blockchain is doing something good rather than just being a speculation and we can make money or we can scam people or we're gonna change whole world. Now we're getting into these seas where yes, there are real solutions coming out of this kind of technology. And it's very nice that you could join us today and explain more about what's Axiology doing and what's your personal views on finance system and Europe and Bitcoin. So thank you for that. And for everyone else who's looking to find out more about crypto, about blockchain, and maybe how it can help your companies or maybe help you as an individuals, we're doing a NAMBLA conference. It's happening 1st and 2nd of April this year in 2026 in Riga, Latvia. So feel free, even if you are not kind of into it, the first day is for free for anyone. You can come and find out about Bitcoin, about is that something that you can use in your own companies or what you should not be doing when entering these kind of worlds, like buying courses from people and so on. So yes, if you're interested, the event is going to be in Riga, Latvia this year. So thanks again, Marius.
Thank you.
And yes, see you in the next episode.